to Neeti now. Help us understand some of these new age tech names, be it a Swiggy, Eternal, or for that matter, Paytm. Does it seem like they would be close to bottoming out?
Yeah, very good morning, and thank you for having me on the show. So, first talking about Swiggy. So, what we are seeing in Swiggy is that, Swiggy has broken its all-time lows, and if I look at on the quarterly charts, it's down by almost roughly around 26-27%. It's though trying to form a base. So somewhere or the other, the stock is trying to form a base. So, but overall, the structure of these stocks, most of these new age stocks are quite negative. So Swiggy, there could be a bounce back, but I would say that since the trend is down, the trend change to happen, the stock needs to sustain above the 310 levels. So this is one stock one can keep a watch on. The second stock, Eternal. If I look at Eternal is somewhat better placed as compared to Swiggy, though it's also still negative on the charts, but it's around a crucial support zone, so we could witness a pullback. But what one needs to remember in both of these stocks, which I've just talked about, is that you could witness a pullback, but again, higher levels will be sold into. So what is the level for Eternal? That's somewhere around the 245, 250. So that's a 10-15% upside, which the stock could witness from a shorter term perspective. And then we could witness some sort of consolidation. And the other stock which you talked about, Paytm. So if I look at Paytm, Paytm has corrected almost 40% from its record highs. Not record highs, I would say the recent highs, because the record high was almost 2,000 levels. So it's still 50% down from its all-time high. And currently, we are seeing some sort of consolidation. The stock is finding some support around the 1,000 level. Again, we could witness some pullback because this is one stock which is at very crucial support zone. We could witness a 8 to 10% rally in the stock towards the 1,080, 1,100 levels. That's it, where the stock could again meet with selling pressure. So all of these stocks are more from a shorter term perspective. You can expect a respite, you can expect a bounce back. But for the bounce back to sustain, they'll have to sustain at higher levels. So for Paytm, it has to be around the 1,100 plus mark.
Okay, that's that on some of these new age tech.
Market did move up, but again, it's down in the red. So it's more of consolidation because, there are no fresh positive triggers for the market fundamentally. Or if I look at technically also, the markets have corrected and are around crucial support zones. So a bounce back is expected, but the bounce back, whether it's going to sustain or not, that's more to be driven by crude oil prices and the US-Iran-Israel issue. So that's more of a very volatile situation. Yes, the good thing is that India VIX now seems to be slightly cooling off. It's around the 2021. So that tells me that markets have factored in most of these things until there is something really new crops up which the markets have not factored in. As far as stocks to watch out for and stocks to look at is that Godrej Industries is one stock one can keep a close watch on. The stock has corrected significantly. It's around crucial support zone. So this is more from a trading perspective because the stock has got strong support around the 820 odd levels. So buying at the current levels for an upside target of 915 and a stop loss of 813. So this is one stock one can look at. And the other stock is from the banking space, that is City Union Bank. This stock has also corrected significantly, and it's around crucial support zone. If I look at the structure, most of the structures to a certain extent are negative, but the stock being in oversold territory, the stock being on a longer term charts positive, and the stock having some significant volumes recently. So this is again one stock one can look at, sustaining above the 240 odd levels, 240, 242. The stock could rally towards the 277 levels. So one can look at that with a stop loss of 223. But one needs to remember that since the markets are volatile and the overall trend still remains negative, so these are more from a short-term trading perspective. Until the time we don't see a consolidation in the markets and Nifty in particular. So for the Nifty, the level is 23,700, 800. That's the first level crucial zone which Nifty needs to sustain and close above that. Then we could say that we will see some respite. Otherwise, it could be these choppy trading sessions with the downside support for Nifty on the 22,900 levels.
Amar and Kunal, thank you very much for joining us today.